finding new information sources that you can access immediately, and then just testing the heck out of things so that you are always testing and learning. You're bringing in data. Does this data help us understand better than what else we'd be doing? And I think that those kinds of things, it's partly about the team that you select in terms of amount of brain power, but not just raw brain power, also that practical side. This is Martha Notaras, managing partner at Brewer Lane for the future of insurance.
This episode is brought to you by Hi Marley. Insurance is about protecting what you love, but for policyholders and the adjusters that support them, it can be a complex experience to navigate. The Hi Marley Insurance Cloud makes it simple for policyholders to connect with carriers how and where they want, via text, cutting through common communication lags that exist with phone and email. Drive value for your policyholders, decrease cycle times, and empower your adjusters and service teams to provide modern, lovable digital interactions that increase loyalty and retention. Visit himarley.com/customers to learn more and set up a pilot in as little as 1 day. You protect what we love. Make your experience lovable with Hi Marley.
Martha, it's great to sit down with you and pick your brain a little bit about where things are going.
It's great to be here, and I can't believe that you managed to fit in a podcast in addition to all of your books. So you're a busy guy.
Well, I think you knew I had some time because I haven't asked you to do anything for one of my new books. So you knew there's a window. So of course I had to ask you something else. Martha, just to kick things off, can you give us a little bit about your background and kind of what got you to the place that you're at today?
Sure. I started investing really in data and analytics companies over 25 years ago. And one of the big companies that I invested in at that time was Risk Management Solutions, RMS, which is certainly well known within insurance. But at the time that we invested in it, it was a teeny tiny, maybe $25 million revenue company. Really? They had been around for a little while, but it was really at the point that Hurricane Andrew occurred that everyone woke up. I had a son named Andrew that year, but everyone woke up and said, this catastrophe risk is a big deal. And that company really kept growing. I became more and more interested in financial services, later stage companies. And eventually, I really morphed that into earlier stage companies when Tom Hutton, who had been CEO at RMS, asked me to join XL Innovate.
Which was one of the first CVCs in the industry, really. I remember when that happened, I was like, we need more of this. This is early.
Well, and it was interesting because one of the things that we worked on very hard at XL Innovate was positioning ourselves as being a hybrid between experienced investors, but a sole LP fund. So we didn't have responsibility to deliver business relationships within the organization, which I think is really quite difficult. But we did certainly have access to the knowledge of experienced insurance people. So I think we kind of had the best of both worlds until it turned out that, we were affected in the same way that other people might be affected by corporate mergers.
Yeah. So the XL Innovate was set up pre-XL Catlin, which means pre-AXA XL.
It was it was
right
2015, which was really just at the beginning of this wave of insurtech. So we were very early. And in fact, early on, we had a kind of a hard time finding good investments, but that actually evolved quite a bit.
Yeah. Well, I mean, it's super interesting to be at that point, at that place in the industry. Before the word insurtech, I don't think the battle between does it have an E in the middle or not even erupted yet.
Exactly.
That took another couple of years, but really interesting. So you were there investing in insurtech with RMS before it was even a thing.
Absolutely. And I think that was, it certainly gave me a really good insight into what it means to sell into insurance. And that when I think about insurers as clients, I will say that they are extremely difficult to sell into because they want to make sure that they're making the right selection, but they are extremely loyal clients once they make a decision.
Yeah. Well, I was going to ask you what makes it so different or so hard, but kind of similar to venture capital, right? You need to vet what you're getting into. It almost feels like VC is easier. It's easier to get funding than it is sometimes to secure a customer, but I guess it depends.
Well, at the moment, for sure, I
At the
think that's
moment,
true.
yeah. So from your days at XL Innovate to today, what's that journey?
So I think that one of the things when I was at XL Innovate, we were very focused on property and casualty companies. And fortunately, that included things like Lemonade and Cape Analytics, ZenDrive. But so we were looking at different kinds of companies. But I think moving to Brewer Lane, one of the things that was exciting for me was we really look at the full landscape of insurance, whether that's property and casualty, life, health, even asset management. And we also invest more broadly in fintech. So we have probably about 75% of our investments are insurtech, but they're all across the spectrum.
Okay. So because you're not at a carrier-based investor, you can be broader than just what that carrier is interested in specifically.
Well, and the other thing is that the fund, Brewer Lane, was founded by John Kim, who was chief investment officer and president at New York Life. So he brings a huge insight into both life and from his various experiences, asset management. So we really combined that with property and casualty. And then both of us have also had a lot of experience on the fintech side. Most of mine has been with later stage companies. So one of the things that's very exciting for me as I continue on venture is really engaging with earlier stage entrepreneurs where there are so many levers to pull. And I think that I used to invest much more at a buyout stage. So you had traction. But you also had certain things that were kind of set in stone. And I think that for the earlier stage companies, there's so much that still has to be determined that it's much more exciting.
It is a totally different investment game. I think people who don't understand that look at, oh, it's just different dollar amounts. The later rounds typically are bigger, but it's more about pouring gasoline on a fire that's already burning versus we're using matches, we're using flint, are we rubbing sticks together? Is everything wet so it's never going to light? I mean, there's so many different things going on. It's much more about almost the mentorship and the connection making than it is about, did you give the money or not? I mean, the money matters, but not.
Well, and I think, Brian, you're onto a really important point right now, especially. And this is a little bit cyclical, but I do think it is a money plus game. It is especially true when the funds are available the way that they are right now. So I think that it is a very important decision for the entrepreneur and their team to make about which VC do we want to work with and what do they know and who do they know that we don't know. So I think that getting that match right, and also there's probably also some just plain compatibility about who will I work well with and who will we each listen to when things are going differently than we expect. And so I think that's one of the things that was a real challenge as we went more and more through Zoom meetings. Really feeling like, are you getting an understanding of what the management team is? And are you able to bring forward what your own firm offers?
I think it's a really important point that people may think when money's flowing more freely, more is inherently better and you can get more. So just go for the most you can get. It almost lowers people's guard for why they should be getting investment in the first place. So it's a good call for people to remember, look for a real strategic alignment, a quality alignment in the relationship and support, not just who's going to pay you the most.
Well, and we've certainly been I have certainly seen entrepreneurs who have made decisions that are not always taking the last dollar, but they are looking with a longer term view and saying, which investor set do I believe will help me exit at the highest dollar?
Yeah. Or build out their vision in the biggest way. And
exactly.
Right.
With that goal of building out the vision, then that being synonymous. Yes.
Well, so Martha, you mentioned RMS and a few others and Drive Lemonade. What are some of the things that you're invested in today? And is there a theme to them, or is there kind of a thesis, so to speak, of what you think is going to drive change in this industry?
Yes, we have a framework which we apply to both insurtech and fintech. We really look at sort of 4 different kinds of companies, and I'll give you examples of each of these. One of them is the engagement layer. And we think of this as any company that reaches out to customers as their primary business. So in that case, we have a company called Hi Marley, which you may know, quite well, which connects people through multi-text threads, and it really enables traditional insurers to interact with their clients in a much more satisfying way all the way around. And in fact, I think insurers are even attributing increases in their NPS scores to working with Hi Marley. So that we feel is a super engagement layer. We also have a couple of businesses that focus on risk. And when we think about risk and analytics, of course, Cape Analytics is in my portfolio again. So this is the 5th time I've invested in Cape. I am a believer in machine learning driven higher accuracy property data. I think it is a core component of all insurance, and you can prove it. You can make better decisions when you have better data. It doesn't really seem very controversial. And insurers agree with that too.
Yeah, I mean, I've talked to a lot of people who work with them or want to be working with them. I have never heard someone who's disappointed, either from working with a company or the solution. I mean, kind of what you're saying, like, it's not just the money, it's also the people who are investing in you. Same thing with the solution providers. Lots of great things going around about Cape. So I get why you keep coming back and investing in them.
And then, there's another company that's on the risk front, which is Cadoxo, which I'll mention because they're on the healthcare front, and they use machine learning to understand fraud patterns in health insurance. Fraud, waste, and abuse, which you and I might think are all the same thing, but they actually are slightly different. And I think that one of the things that Cadoxo is doing is they're basically looking at this problem in a completely different way than other providers into the market. So instead of making the rules and saying, I see this person is trying to sneak scheme 21A, instead, what the machine learning does is say, there's something out of pattern here, you need to go look at it. And I think it's just making people smarter. So I think that is a good example of how we think of risk.
It's really interesting. I'm just like, I'm taken to a place where seeing the things that you see day in, day out, it's going to be fascinating, but then also figuring out, well, which ones matter and which ones do we think can go somewhere?
Well, I agree with you. And I think that probably in some ways, the third category we look at, which is infrastructure, is the hardest one there. So we invested in Socotra, which provides cloud native core tech. And, there is a courageous vision of saying, I am going to go in and sell to insurers the fact that the core tech that they have now, which is held together with duct tape and popsicle sticks, And I think the average life of core tech in an insurance company is about 14 years. Nobody wants to go in and screw around with it.
Yeah.
And Socotra is going in and saying, we can help. We can provide for you a solution. Some people are starting with this on individual product lines, new product lines. And I think that has been an effective way in. And oddly, I think that the pandemic opened some incumbents' eyes to say, you know what, we really do need a cloud-based solution, and it is time. So I think that, but I think that you have to you have to sort of psych yourself up to say, I'm going to sell into incumbents, and I am willing to help educate them, and that's not so easy.
Yeah, that's certainly a long game. It's not a volume game. It's each individual account matters dramatically, and I totally get it. I mean, the pandemic was a time where suddenly you had to pivot hard and pivot fast, and you couldn't. Or the way that you enabled it was with even more glue and duct tape and maybe a team of hamsters spinning the wheels and other analogies like that. But it's true, because otherwise the lights go out, the claims don't flow, policies don't get written, brokers get upset with you, or you need to find a way to stay in business.
Absolutely. Absolutely. And then the fourth kind of company that we look at is disruptors. And these we think of as companies who are disrupting on all of those prior categories. So in that area, I would include Cowbell Cyber, Brella, and Ladder Life. And, we are just super pleased with all of these. And what you have here is an MGA model. I think you can sort of see the end game, that they will evolve closer and closer to carriers. And each one of them is really applying technology in a way that means that the product that they are delivering is fundamentally better than the product that their traditional, opposite numbers are offering.
Yeah, can we talk about that some more? Because this has been an interesting point as we look at some of the disruptors, disruptive insurers, whether they're MGA or full stack, or maybe even just a digital agent right now, or maybe in part of their business. A lot of people just presume, oh, they're new and they, so they had a clean sheet, so that's why they're better and they're faster, and that's why their economics, once they get over the scale side of it, are better. But that's not really good enough, right? So you need to have something that's going to endure as you get bigger, or as someone else who's newer comes along. How do you figure out if it's just the newness or there is something material in there? Because a lot of times the economics don't look right yet. And that's sort of where you're taking a bet, right? The loss ratio is terrible because they're small and they're growing fast, or whatever. How do you figure out if there's actually material advantage in their strategy?
Yeah, and I think that I agree with you. This is you can't tell from the numbers early on.
Yeah.
I think part of what you have to do is really understand what technology they're bringing to bear. So both from the point of view of how robust is the platform that they're putting together. And so, for example, in Ladder Life's case, they had a couple of things that were very impressive. We led the Series C, which is a little late for us. We were usually A and B, but we really wanted to get into Ladder Life because it was so relevant to our theses. But one of the things that we saw was that, first of all, they were building a very robust platform, which they were essentially building to accommodate sort of multiples of the volume that the largest established players have. So from day one, they were thinking about, how do I build a platform that is capable of scaling? I won't have to recreate the platform.
Yeah.
And then I think that the other thing that was particularly impressive about Ladder was that also from day one, they were very focused on how can we underwrite better. So at the beginning, it was absolutely an MGA, which was getting its capacity from established players, and there was a box that they were allowed to underwrite in. But I think that as they looked at that business, they said, we don't just want to underwrite to the standards that we're being told to. We want to understand our underwriting better, and we want to deliver results which will make the capacity providers say, yes, I would like to provide more, or, and this did end up happening, you did better than we expected, and in fact, you are running at a better rate than some of our other business. Yeah. But I think that part of that is finding new information sources that you can access immediately. And there are advantages from not having a pre-existing stack there. Sure. But finding that information and then just testing the heck out of things so that you are always testing and learning. You're bringing in data. Does this data help us? Does it help us understand better than what else we'd be doing? Yeah. And I think that those kinds of things are, it's partly about the team that you select in terms of sort of the intellectual and experience runway that you bring together, the amount of brain power, but not just raw brain power, also that practical side. Yeah. And I think that those were the kinds of things that really impressed us there. And then turning just for a moment to Cowbell Cyber, what I think we see there, and I think the team at Cowbell.
Indirectly, but I still haven't talked to them yet, but I want to.
Oh, well, you have to do that. But that business really is combining a layer of cybersecurity with its underwriting capabilities. But one of the big innovations that they are bringing is a much more real-time approach. Mm-hmm. So that, first of all, you're not underwriting based on a 200-question questionnaire that the person who is filling it out probably doesn't even know all the answers. Yeah. And then second of all, so you are looking at actual facts in the market and in the ether. So you're looking at that, but then also you are continually monitoring so that you are when solar winds or whatever occurs, Cowbell can go in and immediately identify which of its customers might be at risk. Yeah. Reach out directly to those customers. That stuff doesn't happen in insurance, but it happens in insurtech.
Yeah, and it doesn't even. I mean, you talk about something like that, where how would you even begin to know that the spider web connects them through to that exposure? I see property carriers struggle when there's a hurricane coming. We have to figure out how we're going to get the list of all the homes or all the business properties that are going to be affected potentially by this. Like, how do you not? It's just zip code or but that's real, right? I mean, so that's where we're at as an industry. So if insurtech is able to do that with something as seemingly hard to do as, are they going to be exposed directly or indirectly to this bad actor or this hack or this exposure? We definitely have to up our game across the board. If we can't even do it with, is this house in the path of a hurricane, where we know where it's going to hit?
Yeah, I totally agree. And I think that actually that's one of the reasons that, we think that there are still highly insurable risk businesses, because I don't feel like insurers have maximized the use of data, and especially the use of new streams of data. Yeah. Thinking about them, either new streams of data and probably processed through artificial intelligence. So I think that you are seeing multiple insurtechs that are going out and finding ways to look at problems differently. And the other thing that is great about insurers is that if they find something that they believe is a better predictor of risk, they will do the work to understand whether that is predictive of their claims, on a past claims basis. And if they can save, 5 or 10%, it's a huge number.
It's huge, yeah. And it's 5 or 10% that gets to go to surplus instead of reserves, which means you can invest it better. And yeah, it's not just like an extra dollar. If it's a
It's
dollar here or
better than an
there,
extra dollar. Yeah,
yeah,
you're absolutely right.
it gets
Yeah.
leveraged. So I'm curious, when you look at those 4 buckets, and of course the last one's the most interesting because it's what could change everything. But then the others are what enables that change in the first place. They're all, you need them all. Where do you see things headed? So what does this all add up to? And is there a future state that you're then tying back to those investments, or you're placing a number of bets and it could play out a number of different ways?
I think as a VC, you have to be placing a number of bets, and it can play out a number of ways. We certainly have theses that we think about, but we are very aware that it's a dynamic market, and I think you have to go with teams and operating plans that feel like they have the ability to scale, and that they are addressing a large enough part of the problem. So one of the things that we see right now, and let's think about this on an engagement level, but we're seeing a large number of people who are creating APIs to connect the various places within insurance. And some of these are connecting agents and really trying to deliver efficiency for agents, which I think agents and brokers have really suffered over time, where so much is done manually. You have an assistant, but really you can leverage that a lot more. And I think that some of those, and then I think the other kinds of API have been the more of the marketplace type APIs. Obviously you had Bold Penguin and some of those kinds of marketplaces, but where you really are seeing people connect in different kinds of insurance with different kinds of marketplaces. So I think that we're seeing a level of interconnectivity. And sometimes I wake up and think that that's an infrastructure issue. And sometimes I wake up and think it's an engagement issue. But nonetheless, there is, I think, a broad desire to be more connected and to have access to more channels, but also to do it in a way that is essentially seamless in terms of effort, because otherwise I think you are too much relying on having to build out custom solutions for a channel that you don't know for sure is going to be the one.
Yeah. Martha, is this the kind of thing, when you talk about scale, I imagine you're not talking about, they're just getting more compute power and bandwidth than they need right now, and they've built the ability for their database to go to this many rows instead of this, smaller number of rows. You're talking about option value, right? You're talking about the ability to flex and to bring in new data sets and new distribution solutions. And is that what scale means to you when you're talking about like Ladder, for example, or others?
Well, I think that it is all of the things that you mentioned, but I think that as I think of scale, I actually really think about the top line. How many policies you're selling, how much flow you have through your APIs in terms of, you might measure that in terms of premium bound or premium quoted, depending on which side of the equation you're on. But I think that really the question is, can you get big enough to make a difference in the market? And part of that is, are you looking at a problem that is a big enough problem? And are you looking in a part of the market that is a big enough part of the market? So that always comes down to, the total addressable market.
Yeah. David Gritz from InsurTech New York said this to me the other day. He's like, a lot of the newer startups, they're not looking at, and he used drones as an example, and not to knock drone insurance or what turned into Thimble used to be a drone cover, but it's not like drone insurance. It's like auto insurance, or homeowners or commercial. It's really big markets. The flip side is they have a ton of competition. They've got a ton of entrenched players, and and not a lot of greenfield, totally new insureds. Often depends on the space, maybe. So then it's about share stealing and competing. You're competing in personal lines. You've got billions and billions spent on advertising and share of mind. So how do you kind of weigh those two things? It's like you go into this weird esoteric thing but there's no competition, so it's all you. But this is as big as you get, or you're going to this huge pie, but there's a lot of people there with very sharp knives that are looking to cut you at every turn.
And I do think that you really have to, when you're going into the large markets, you really have to believe that there's something that you do that is special and that you're going to be able to communicate that. Now, the good news is you don't have to communicate it with everyone who's getting their home insured.
Yeah.
And it's one of the things, for example, going back all the way to Lemonade, if you think about renters insurance, which really is not the most obvious place to enter the market because it's tough to make a living out of renters insurance. But the massive thing about renters insurance is something like 75% of Lemonade's early customers, and maybe even this is true now, have never bought insurance before.
Mm-hmm.
So in fact, that's a situation where you do have greenfield customers who will be highly susceptible to an easy way to do things. Yeah. So I do think that in a lot of these businesses, there are areas of greenfield. And even, for example, you were talking a little bit about some of the aggregators. One of the things that you saw there was during the pandemic, a lot of people did go and renegotiate and shop for their insurance. Mm-hmm. So in fact, not only did you have sort of the level of people who always shop for their insurance, but you had more people spending more time thinking about that. Now, that obviously isn't predictable in terms of, I hope, in terms of, the impact of the pandemic. But I think that you saw some of the aggregators being ready with that, being ready for an influx.
Yeah. Well, it's interesting. I just think about, for so many of us, and actually legacy and startup, you build something and there's all these, is more, it's an MVP kind of approach. There's so much more we need to build, or we hard coded this because we had to get it out. I was talking to someone yesterday about core systems. So many people launch without the ability to renew policies because we get a year, right? We don't need to worry about it. And then sure enough, a good chunk of them, year two, a lot of their new business is really, there's a note in there somewhere in the file that says renewal because they still hadn't figured it out. That's not scaling, right? That's not being ready for something that's blatantly in front of you.
Well, and I think in some ways that is also where, the quality of the team that you bring in is also important. It's the quality, and I think it's the relationship among the teams, that somewhere on that team, there has to be a nudge who's saying things like, we still didn't do this piece. Right. Instead of saying, yes, let's do the next 7 things. But I do think that, and in fact, I think that was one of the hard things to judge when we were all on Zoom, was some of those interrelationships where when you're sitting in someone's office and you're around a table, you kind of get a sense of who's talking over whom, and whether it's a good talking over where everyone is ideating, or whether it's a less positive relationship.
Yeah. Zoom only allows one audio at a time. So duplexing, I think is the term. Anyway, that's a really good point. And then are they nudging, and how is it accepted or not? Because everyone's got an agitator. It's a question of whether their voice means anything, and if there's value to it, because maybe they are just cuckoo, but chances are fine, but maybe there's something to what they're saying. We should at least be taking that in. Martha, I could talk to you for days, but I won't. Was maybe some parting wisdom, because you've seen such an amazing breadth of different kinds of solutions, different points in their lifestyle, different things people are trying to build for different reasons. Is there any sort of like salient if I'm speaking to founders, this is the thing that I would leave them with?
So I think a couple of things in terms of founders. One of them is really trying to put together a founding team where everyone doesn't agree. You can still be agreeable, you can still be collegial, but I think that the more kinds of experience you have, and this speaks to diversity of all kinds, but I think the more kinds of experience you have, the more productive you can be, and the more in touch with your markets you can be. So I think that that is something that I would really encourage founders to try to reach outside of their comfort zone and outside of their own natural first layer networks to find the right person or the right people around them at the beginning. And then the other thing I would say is talk to everyone. Really spend time in an organized way, asking questions and finding people who will talk to you. Understand that insurance is run by really smart people who are constrained by a lot of legacy thinking, but they're not dumb people. So a lot of the things that could be solved, people have thought about these things. And I think that the more you understand about what hasn't worked, the more you can really understand what solution you can bring forward.
Yeah. Oh, that's really good advice. And I think it's something that's easy for folks to forget because they see like, oh, well, look how bad this is. No one's done anything about it. It's not for want of trying or being aware of it. And there are constraints and not everyone can see how to break through them, or they're not given the freedom to do that. And so maybe you have some leeway that they don't have. So, but it doesn't make them stupid or dinosaurs or any of that kind of thing. Dinosaurs are pretty cool, but maybe not when it comes to change.
Indeed.
Martha, it's really fun to talk to you and enlightening. And the things that you've gotten to engage in, it's amazing. Like all these things that are brewing, no pun on Brewer Lane, but all these things that are brewing and where our industry's going, it's going to be a fascinating thing for you to get into every day.
Absolutely. Fun ride.
Cool. Martha, thanks so much for your time.
Thanks, Brian. Really appreciate it.
So great to get some time with Martha. I hope you all took a lot from that. She has been at the forefront in the deals for some of the biggest, most interesting actions and names in the insurtech insurance space. And you have fintech more broadly, but absolutely on the insurtech side. Some of the most influential companies, some of the most disruptive and interesting startups, and yes, some of them that I worked at or I have a relationship with, so maybe I'm a little bit biased, but Martha has been there, and it was amazing to get some time with her. She has seen a lot, she knows a ton, and she just has a great attitude on thinking about, where are things going and how, and really, I think taking in that message around the cultural side of it, the value side of it, the connection side of it. It's not just money. There's lots of money everywhere. That's not the differentiator. It's the success that comes from the relationships you build, how they work together. I mean, to her point, not just with those funding you, but internally, right? Do you have someone by your side who's going to challenge you, who's going to make you work harder and better and smarter, or just say yes to the things that you're thinking of? So you may come up with something good, but it may not be as good as it could be, or may not be good enough. So great insights and guidance from a true revolutionary visionary in the industry. Awesome to get some time with Martha. I want to thank you all for listening in, for the thoughts and the ideas that all of you put forward about what you want to see, what you want to hear on the show. And thank you to Hi Marley, who, when they found out that Martha was going to be on the show, wanted to sponsor this episode. So big shout out to the team at Hi Marley. And with that, I will see you all next time. I hope that this was a good conversation and inspiring and enlightening and getting you to think about the circle of people around you, who you lean on, who leans on you, who you challenge, and who you look to for support. Thanks, everyone.